Hi, this is your investment update for October of 2017. Good month for equity markets. Both the domestic and international markets were up over 2%. Bonds, really not much going on. The domestic markets were flat. International bonds were actually down about 40 basis points. So what we had is just a kind of a continuation of what we've talked about. Growth stocks are kind of dominating the market right now. Value stocks are up year to date, but growth is outperforming them by over double digits. We see this kind of towards what we feel are the end of cycles where you have the pendulum swinging way too far one way and then it tends to snap back. And over time, over 100 years of history, values outperform growth. So we feel like that's the way to stay, even though right now growth stocks kind of tend to dominate the market and dominating the headlines. The most interesting thing that has happened recently is the nomination of the new Fed chairman, Jay Powell. What's interesting about this is Jay Powell, he was Undersecretary of the Treasury under George H.W. Bush, so he has political experience, but what's most interesting is he has a very extensive business background as an investment banker and a private equity guy. He's tremendously wealthy. He's made it all himself. This is kind of a departure for Fed chairmen. The norm's been through the last couple of decades is to have a PhD in economics as the Fed chairman. And what that kind of does is kind of leans more towards the academic side when you're instituting Fed policy. So it's X's and O's. We raise rates or we cut rates this much, and this is what it does to the economy, and it creates this many jobs, and it does this to how we, loose or tight monetary policy. But what it does also is it sort of ignores how human beings react to their policy decisions. So having a business leader in there that has run companies, that has reacted to Fed policy decisions, should make him more cognizant of how the real economy may behave based on some of the actions that the Fed takes. So that's something a little different that we haven't seen in a while. He was also, he's a Republican, and he was also kind of a dissenter against the third round of QE, even though he ended up voting for it. So he's not that big of an easy money guy, even though the media is painting him as dovish. For more on this, I'd point you towards our newsletter. Daniel DiMartino Booth, who spoke at our annual meeting this past February and was under Richard Fisher at the Fed for many, many years, wrote a very extensive piece about him. We're going to reprint in that newsletter just to show you how different and much of a departure this is. So it'll be interesting to see how disruptive his policy is against kind of what the norms we've experienced over the last 9 years will be.